Hey everybody, Mortgage Hero Bob here with Orion Lending, where our goal is simple, to give you the power to say yes when everyone else is saying no. Today we're talking about the 5 biggest non-QM myths that are costing loan officers millions of dollars in lost opportunities every year. And if you believe any of these myths, there's a good chance you're losing deals every single month, so let's jump right into it. Let's start with the biggest myth of all. Non-QM is just subprime lending. Now technically there are similarities. Non-QM exists to serve borrowers who don't fit inside traditional agency guidelines. But today's non-QM market is dramatically different from the subprime lending that contributed to the financial crisis. Back then, lenders were making loans with very few safeguards. You could see 100% financing. You could see true stated income loans where borrowers simply wrote down whatever income they wanted without meaningful verification. You could see borrowers entering transactions with little or no equity. Today's non-QM market looks very different. Most non-QM loans require meaningful down payments or equity positions. There's typically an equity cushion built into the transaction. Income still has to be documented and supported. It may be through bank statements, it may be through profit and loss statements, it may be through asset utilization. It may be through rental income on a DSCR loan, but there is still a documented path to qualification. You can't simply write down any income number you want and get approved. Modern non-QM is essentially the evolution of subprime lending. It was rebuilt with significantly more responsibility, more accountability, and more risk management. So when someone says non-QM is subprime, my answer is simple. It's subprime done responsibly. Next myth. Non-QM rates are always terrible. This is one of the fastest ways I see loan officers kill perfectly good deals. Here's why. Most people compare non-QM rates to conventional rates, but that's the wrong comparison. If the borrower doesn't qualify for conventional financing, who cares what the conventional rate is? The real comparison should be this. Does the borrower get approved or not? For a self-employed borrower writing off substantial business expenses, or a real estate investor using a DSCR loan? For a borrower with complex income, non-QM may be their only financing solution. And when you compare a funded loan versus a declined loan, the interest rate suddenly becomes much less important. Another thing many people don't realize, pricing in the non-QM market has improved dramatically. As competition has increased and the industry has matured, rates have become significantly more competitive than they were years ago. Are they generally higher than conventional rates? Yes, but often not nearly as much as people think. And for many borrowers, the ability to purchase a property, refinance, pull cash out, or acquire an investment property creates far more value than worrying about a slightly higher interest rate. Remember this, rate matters, but access to financing creates opportunity. Which non-QM myth do you hear most often from borrowers, realtors, or other loan officers? This one couldn't be further from the truth. In fact, non-QM was practically built for self-employed borrowers. Bank statement loans, P&L loans, asset utilization programs. There are multiple ways to qualify borrowers without relying entirely on tax returns. Many business owners write off legitimate expenses that make their taxable income look much lower than reality. Non-QM helps bridge that gap. Now let's talk about another myth I hear all the time. DSCR loans are simple. And honestly, that's only partially true. Yes, the qualification methodology is simple. Most DSCR loans qualify based on the property's cash flow rather than the borrower's personal income. So from an income documentation standpoint, DSCR can absolutely be one of the easiest loan products to originate. But that's where a lot of loan officers get themselves into trouble. They think because the income calculation is simple, the entire transaction is simple. And that's simply not true. With DSCR loans, everything is heavily dependent on the appraisal. The value has to work. The rent schedule has to work. The market rent has to work. And if any of those components come in lower than expected, you can suddenly have a problem. I've seen appraisals come in short on value. I've seen rent schedules come in below market expectations. I've seen DSCR ratios fall apart because of a lower than expected rental analysis. And that's where experience becomes extremely important. That's also where the partnership between you and your account executive becomes incredibly valuable. Because when challenges arise, you need someone who understands the guidelines, someone who understands the appraisal and how to structure solutions. Maybe we adjust the leverage. Maybe we restructure reserves. Maybe we identify another way to strengthen the file. The point is this, simple doesn't mean automatic. DSCR loans can be straightforward, but success happens before submission. It starts with properly analyzing the scenario, understanding the appraisal risk, and having the right lending partner in your corner. So if you're treating every DSCR loan like an easy layup, you might be setting yourself up for surprises. Now, myth number 5, completely false. Foreign nationals purchase U.S. real estate every single day, and many non-QM lenders offer programs specifically designed for them. This is one of the most overlooked opportunities in our industry, because many loan officers incorrectly assume it can't be done. So here's the reality. The loan officers winning in today's market aren't saying no, they're learning how to structure loans differently. They understand that every borrower doesn't fit inside a conventional box, and because of that, they save more deals and close more loans. They grow their business. Non-QM isn't a last resort, it's a solution, and if you're not actively learning non-QM, you're leaving deals on the table. If you have a non-QM scenario you'd like me to review, drop it in the comments below. And if you'd like to learn more about DSCR loans, bank statement loans, I'm always happy to help. Don't forget to like, subscribe, and follow me for any and all mortgage content. Have a good day, and I will see you on our next deal.